Hey everyone, welcome back to the channel. If you have ever wondered how businesses figure out the actual cost of making and selling a product, you're in the right place. Let's move on to the next chapter or the main topic, that is preparation of cost sheet and ascertainment of profit. By the end of this video, you will understand how companies calculate costs from raw materials all the way to the final sale. Let's break it down. First one is prime cost. First step, we have prime cost. This is the direct cost of manufacturing a product, and it includes three things, that is direct material, direct labor and direct expenses. Direct material, that's the raw stuff used to make the product. We start with the opening stock, and with that opening stock we will add purchases of raw materials and carriage inward, then subtract the closing stock of raw materials. What we get is the raw materials consumed. The next one is direct labor. The wages paid to workers directly involved in the production is known as direct labor. And direct expenses are any other direct costs like special tolls or design fees. And when we add all these together, and here you get prime cost. So first we will find raw materials consumed by adding purchase to opening stock and deducting closing stock. Then we will get raw materials consumed. With this we will add direct labor and direct expenses, and we will arrive at prime cost. The second topic is works or factory cost. Okay, so first of all we will take the prime cost and add some things. So let's see what are those. First one is production overhead. These are indirect factory expenses like electricity, rent and maintenance. With this we will add opening stock of work in progress, and these are partially completed goods from last period, and then we subtract the closing stock of work in progress. The result, yes, works cost, the total cost incurred inside the factory. Okay, the next one is cost of production. Now we add administration overheads related to production, like we can say salaries of production managers or office supplies used in the factory to the works cost. So to the works cost we are going to add administration overheads, and this gives us the cost of production. The fourth one is cost of sales. Here where things getting interesting. To get the cost of sales, we start with the cost of production, and to the cost of production we will add the opening stock of finished goods, which means products made last year but sold this year, and then we will subtract the closing stock of finished goods. Those are products made this year but sold next year. Then we will add selling and distribution overheads, like for example we can say marketing cost, shipping and sales commission, etc. And this gives us the cost of goods sold and finally the cost of sales. The next topic is total cost. To wrap it all up, we add administration overheads related to sales, like office salaries and admin expenses to the cost of sales. That gives us the total cost. In cost accounting, the opening stock of finished goods is added. Why? Because it represents products made earlier but sold now. The closing stock is subtracted because these products haven't been sold yet, they are future revenue. So cost accounting isn't just about numbers, it's about timing, strategy and understanding how every rupee spent contributes to the final product. That's all for today's video. Until next time, keep learning and keep growing. Thank you.